Hello everyone. Hi Professor. I am Gunjan Kumar Patel. My student ID is 20237482. Today I am present group presentation. First one, AGL Energy Limited ratio analysis. Liquidity ratio. The company's current ratio declined from 1.24 in 2021 to 1.13 in 2022, showing reducing in liquidity. The drop of the current uh, obligation above current assets growth indicate to a possible stress on playing short-term commitments. The quick ratio, which just take into account to assist with the highest liquidity, however, was reasonable constant at 1.071 in 2021 and 1.075 in 2022. This show that AGL Energy Limited continues to preserve a amount of short-term liquidity even in the face of a fall in the current ratio. Second slide is efficiency ratios. The return in on total assets of AGL improved greatly as a result of its efficiency of its assets. It moved from 40.13 in 30% in 2021 to 8.39% in 2022. These improvements show that assets are being used more profitably. The company's inventory turnover ratio grew for 18.97 in 2021 to 26.61 in 2022. Suggestion greater progress in infinity management. Further, there was a fall in the inventory turnover in days from 90.24 days to 30.72 days, including a quicker turnover of stock and maybe greater liquidity management. Next line, please. Nitin present.
My name is Nitin Kumar Joitabai Gamba. My student ID is 20234257. First, profitability ratio. The gross profit ratio of AGL Energy Limited declined from 29.08% in 2021 to 20.79% in 2022. This reduction shows lower sales profitability, which may have been driven on by increasing expenses. Positively, through the corporation generated a profit in 2022 after including a deficit in 2021. Significant profitability improvement was proven by increase in the net profit ratio from 18.82% to 6.45%. Next slide, please, Gunjan. Solvency ratio. Solvency ratio show that AGL's financial structure in 2022 will be more leveraged. The debate ratio and the debate to inquiry ratio both grow, reaching 1.96 and 0.66 respectively. This increasing suggests increased financial level and a bigger percentage of debate in the capital structure, which could could put the company at greater danger financially.
Hello everyone, my name is Chirag Patel and my student ID is 20234219. Firstly, I started about the market performance ratio. You can see in this table in 2021 and 2022 is divided by into what. Firstly, I started the AGL Energy Limited market value climbed for 51099 million to 2021 in 58993 million 2022, showing is a good sentiment among the investor. Better returns were also enjoyed by shareholders. At the return is a shareholder increased in minus 30.55 in 2021 and 14.19% in 2022. Earning PPT share exhibited is increase, the trade implying the increased profitability and value for investor. Next slide please, Gunjan. A growth point properties ratio analysis. First, I started the liquidity ratio. Growth point properties showed in troubling trade in liquid over the 2 years period from to 2021 to 2022. Evidenced its liquid ratio. The company capacity satisfied the obligation with the current assets be current ratio, which the decline in 0.35 in 2021 and 0.32 in 2022. Likewise, there was a fall in fast ratio which offers more than caution, indicator liquid and keeping out the inventory. Next slide, Gunjan, please. The efficiency ratio and profitability ratio in divided into what? Growth voting in properties displayed the increased efficiency indicated decline in return of the total asset from 11.52% in 2021 and 8.49% in 2022. Probability ratio in growth point properties maintained a constant probability over the 2 years period with the gross property ratio in grew sometimes. Next present is Daxis. Thank you.
Hello everyone, I am Dakshish Kumar Patel. My student ID is 20237058. Firstly, I started solvency ratio. The solvency ratio of growth growing properties show a somewhat greater amount of debt from 2021 to 2022. The capital structure debt to equity ratio climbed from 0.48 to 0.56, indicating a bigger share of debt together with a small increase in the ratio of total liability to total asset. The debt ratio also grew, moving from 0.33 to 0.36. The company's long-term financial stability should be carefully assessed in light of the tendency which speak to an increased ratio of debt funding. Market performance ratio. Growth point property market value increased from 2060.32 dollar million in 2021 to 3,141.223 million in 2022. Acceptability, a good market performance due to good invisible attitude. The market price per ordinary share rose from $3.41 to $4.07. Considering lower return for shareholder were evidenced by the decline in the return of shareholder equity. Growth point property financial results were not totally consistent. Net standing issue was the liquidity and uncertain inventory efficiency as a result of insufficient data, sustained profitability, and favorable market trend were identified. A higher reliance on debt is reflected by rising financial leverage. Enhancing the opening of reporting is crucial for a competent review of the company financial situation. Next slide. Conclusion and recommendation. Conclusion. Excellence advance in asset utilization, profitability, and market sensitivity were demonstrated by AGL Energy Limited in FY22, but mounting financial debt and declining short-term liquidity and growth for concern and call for a more complete study of the company's financial resiliency. Growth point property